Record. All right. All of the Zooms do get recorded, and just in case if you want to go back to something that got that we touch bases on, and if you want to go back, all the real estate education or all the previous Zooms are available. Um, Let me put in the link of all previously recorded Zooms. Um, all the recordings get put in on the educational side of my website. About to drop the link in the chat right now. And then anything else related about education side, in terms of like real estate or real estate wholesaling, again, it's going to be available in there as well too. So any books or anything to like help you get started in your journey of real estate investing, or real estate wholesaling, whatever it is that you're trying to get into in terms of like real estate, it's available on that real estate education um, a link that I provided. Let's see, where's my complete rental? Okay, all right, let's set this up. Let's head over here, complete rental calculator. So we do some analysis in terms of rental properties and also fix and flip properties as well too. Again, both of these are deals that can definitely get into like wholesaling. There's also like creative deals in terms of like seller finance or subject to as well too. There's so many numerous strategies that we're able to do in terms of like real estate wholesaling, but all of them, part of the wholesaling is understanding how to do the due diligence on those numbers. The main ones that we focus a lot on these are the fix and flip and buy and hold strategies. But we'll get into on that in just a second. Let me start this up. All right, cool. So welcome everybody. My name is Elton, like Elton John. I've been doing this series for almost 3 months now. It's been going really good, so I really appreciate you guys' support on joining the series. This happens every Monday, Wednesday, Friday at 6 p.m. Pacific Standard Time. This coming Friday, there might be a change on the schedule. It is still to be determined. But if you're trying to join this Friday, just pay attention on the comments or anything, any changes, if you happen to be interested on attending for this coming Friday. Other than that, the series does again, it is always live, so we're always constantly analyzing deals that are currently live on the market at the moment, and anything else from there. If any addresses or anything get provided, then by all means, we do like to check it out and then see what gets provided to us. I always like to do about one to two, maybe three of them, depending on if it turns out to be like a deal or not a deal, in terms of like the property address that we do get. So just be aware about that. So I won't be able to analyze every property whatsoever. I mean, I can analyze them on my own time, but at a different speed. But when it comes to like teaching, that's going to be a whole different process from there. So again, we're gonna end up doing about two or three of them, depending on how many we end up getting. Which I see we have some in Miami, Florida. Okay, awesome. That's really cool. Thank you. I really appreciate that. If you happen to have any of the details on those addresses, by all means, put them in the chat as well too, so that way we can get like a sense of what it is. But we'll get back to that. A little bit more background, a little bit of background about me is I've been wholesaling for the last 10 months. In terms of like real estate wholesaling, I've been backing out a little bit from real estate wholesaling just because I'm transitioning to buying like my own properties right now. And anything beyond that, I started learning about real estate wholesaling back in 2020 during the pandemic when we're all inside of our homes. It was just constantly watching a lot of videos during that time. There's nothing else to do. So I was just really on YouTube, TikTok, and just learning about real estate wholesaling at the time. And then from there, just got back to it a few years later, and then 2020, 2023 is when I dove in right into it, and it was pretty fun. Based on my background, the numbers side, it came out really easily. The Because my background has been in terms of like sales. I've been doing a decade of sales already, so when it comes to real estate wholesaling, it's all about getting in touch with people, building relationships with people, and that's pretty much sales. You're either pitching a product, you're pitching a service, or you're pitching up yourself as well too. So it's literally just targeting people, and of course, just not being shy to just get out there. And the worst thing somebody can say is no, they're not interested in selling their home. So it's not a big deal whatsoever. But when it comes to analyzing the properties for investors, then that by all means, it is definitely a crucial step that you have to do, because you want to make sure that your numbers are they don't have to be really spot on, but they have to be at a decent, a good amount of discount, where it makes sense for you, it makes sense for your seller, and it makes sense for your buyer as well too. Sometimes there might be agents involved in the middle. That's perfectly fine as well too. There's incentives to bring over two agents, but again, it has to make sense across the entire board. So don't put yourself as the main priority. Put yourself at the main priority should always be helping out others, because you're trying to bring a solution to a problem they have, which that problem is a motivation to those people that you're helping out. If they're buying or selling, regardless of what the step is, it's again, you have to you have to put them first before you put your interest into it. Because again, this business, it's literally all about relationships. Other than that, I want to dive into it, so that we just can learn a little bit about wholesaling, which wholesaling comes down to just a few steps. The only thing with these few steps, there are little steps to be executed in each level, or each step of the whole process of wholesaling. The main one that we focus on this series, which again is hosted every Monday, Wednesday, or Friday at 6 p.m. Pacific Standard Time. It's estimating the repairs, and then understanding where your offer needs to be, in terms of again in terms of like getting the property like under contract, and what's that highest offer gonna look like. But before you even get into like that aspect, again, I put somebody else in front of you first. So a lot of these deals, when it comes to wholesaling, is you want to bring it over to a buyer that is gonna want to take it off your hands as quickly as possible, and you have to kind of again put yourself into those shoes, so that way you're able to understand like where would a buyer buy this property at, how much would this type of buyer buy it at, how much would this other type of buyer will buy it at, how much is third one, and so on forth, depending on how many buyers you have. So yeah, it is essential for you to understand where your buyers do how your buyers do their due diligence, and how they calculate like their numbers as well too. So with that, it's basically comes down to, first things first, it's ARV, or after repair value. That is going to be the number one thing that a lot of buyers are going to want to understand first, in terms of like the area that you're looking into, or the neighborhood that you're looking into, depending on where your market is. It's understanding how much is it going to take for to repair like the home, and what the property's home will be after it gets repaired. So that way they're able to make like their profit at the end of the month, or the end of 3 months, 6 months, however long it takes to do like the repairs. But ARV is going to be like the number one thing that we have to find out in any market, what's the area, or any subject property that we're looking into. The rest, it comes down, is going to be very differently across all buyers whatsoever. It doesn't matter how wealthy or how much experience your buyers have. It's literally about understanding how is it that they calculate the numbers. And the simple way of knowing that is as simply as asking, "Hey, Mr. Buyer, I see that you're very active on this market. I see that you flipped a deal last month in January at this address. I have another property in the same neighborhood as well too. I'm curious to see if you might be interested on a property, on another project or another opportunity. If you're by any chance still active, or you're looking for more deals, how many deals are you doing? And also, like, can you help me understand how you calculate like your numbers? So that way, if I come across other great areas, or come across other great opportunities, I can definitely bring them over to you, because I'm able to understand how you calculate your numbers. It's Simple as that. I know I say as simple as that. It takes practice, practice, and practice. Nothing really happens overnight. Just like with anything whatsoever, it takes time to build that. But it's again, it's just putting yourself out there and getting that experience either hands-on, or if you're doing it virtually, just start getting it all over the phone. But take action. Don't just study, 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 and then you kind of get stuck in this study phase that you're like, I don't know, I'm not ready to jump into it. I'm kind of scared. So literally taking action, it is very essential into it. So again, that's the way you're gonna find out. It is essential for you to find out how to get like understand where your buyers are coming from. But before understanding that as well, too, know that ARV, it is going to be the number one thing to calculate, which we'll get through that in just a few minutes. Next is understanding repairs. Repairs, I like to keep it as plain and as straight up cut, crystal cut, or sharp cut, diamond cut, whatever you want to call it. I want to keep it as simple as possible to you and let you know that the reality is it does not matter what your numbers say. Buyers are always going to tell you that the property either needs more or it needs less in that property that you're looking into. Why? The reason why is because some buyers, they might be new to the area, so they don't have a contractor that they've done businesses with. They're new to the area and they don't know what the labor and what the parts are going to cost in that area. And then sometimes you're going to have buyers that like to do luxury labor and luxury parts and materials into the specific property. So they're trying to make like the most out of each opportunity. So if I have like a property that I'm looking at and it needs $30,000 in repairs, I bring it to investor number one. The investor's going to end up telling me this property needs $70,000. I bring it to investor number two. Investor number two is going to tell me that this property he or she can get away with $25,000. And then investor number three is going to be like, oh yeah, you're like right spot on, maybe like a few thousand dollars off from it. So it really depends. So I don't like to get down to the niche of like this property needs this exact number in repairs whatsoever. It is good to have like some like a contractor or somebody to like check it out to if you want to get like very if you're have like ADHD or it's just you like to get down to like the specific numbers, then by all means you have to hire somebody professional to give you that professional feedback. So that way when you talk sending over your information on your property to your buyers, they're gonna be able to understand, okay, you have somebody professional and they gave you a list. All right, then I'm gonna go based on that list. But just like real estate, always, for whatever reason, always the unexpected expense always comes across the board. It is very common for that extra, maybe the foundation, maybe the utilities like the water heater, the HVAC, maybe the wall, the vinyl siding had mold and we couldn't find it unless there was like a broken piece into it. So again, you never really know what's going to happen in each opportunity and what kind of repairs are going to be, the exact repairs that are going to be happening. So again, just always expect the unexpected, which is kind of ironic and dumb to say, but it's, you know, all reality from my experience, it truly happens more often than you think in terms of like real estate. So when it comes to repairs, look at the repairs that we're looking over here. Stick to these average repairs. This is nationwide. There is going to be some states like California, Florida, Texas, New York, Massachusetts, Washington. There's quite a handful of states where the expenses are going to be a little bit more. And it's not on the material side, it's going to be more on the labor side. It's just, again, that's how it is in terms of like services in some states. And those states are going to be like the most more expensive. So that's the only thing about that. But if you're looking like Midwest or kind of like far away from like metro areas type of properties, then those repairs are going to be very differently. But again, stick to the average repairs at the moment because that's where it's going to help you understand. And the first phase of the repairs is going to be the light repairs. Light repairs are going to be properties that are newer, 2010, 2015, that are just really, or maybe there's some great properties that have been really taken care of, even if they're older as well too, and they just need little touches in terms of like paint. Just update the paint. It will take between $3,000 to $5,000 in the paint, depending on how big the home is. Carpet or flooring, you probably have to do some carpet or flooring. That's probably going to take $8,000. If anything, or if it's just a carpet change, then it's going to be a lot less from there. So it really depends, but usually the property's in great shape and great condition that it just needs a few touches. Now, the average repairs, we start listing the major areas. Those major areas are going to be kitchen, flooring, bathrooms, painting as well too, lighting, if anything, extra touches like windows, doors. That's when we start getting into like the average repairs. We start getting more into like a handful of projects, and sometimes if it's easy. Additionally to some gardening that needs to be either on the front or in the back of the property as well too. These are going to be average repairs are going to cost between 25 to like $40 per square foot. Next is going to be gut job repairs. Gut job repairs. This is a complete nightmare, and it's going to be it's going to be two ways. Either it's going to be one way, it's going to be a complete demolition of a property. The only thing that's not going to get demolished or broken, or that it's going to get like any major work done to it, is going to be the foundation, unless there's cracks in the foundation, which sometimes there might be. Then that's something that you have to deal with as well too. That's going to be an unexpected expense. But a gut job is going to be a take down everything, which could leads to path number two is strip down the property from the inside and take everything out whatsoever. Just the only thing you probably have to leave is the studs, unless the studs or like the main frame of the home has like some molding or something going on where it just needs some type of replacement. But gut job repairs is just going to be those nightmare properties that just need everything or anything executed, and you're probably going to have major issues as well too, like I was mentioning the foundation, sometimes even piping as well too. You probably have some properties that are burnt down, so you have to deal with new permits to come design the property and make sure everything is up to code with the new design and with the new construction, or everything that got done inside of the home as well too. So a gut job repair, it's pretty much the entire 100 yards that a property needs to bring it from a 1960s demolished home to a 2024 standards type of property. Okay. So again, repairs, don't dwell to them. Just stick to the average repairs numbers that I was just mentioning from there. Now, part of the process is we have to know the repairs, or we got to look at the picture. We have to look at the at least like get like a sense of what the property needs. If there's no pictures or there's no if you're talking to like sellers, there's usually like not a lot of pictures. Maybe if you're virtual wholesaling, you're not in the area, so you can't really look at the property. You have to find out what the property needs inside. So it's either having somebody check it out for you to take pictures of it, or if you're doing it locally, then you have to go inside of the property, take a look at it, and kind of get like a rough estimate on what the property looks like. If it's going to look like this, like the guts of repairs, or the ceiling, the floor, it just everything looks horrifying, or is it going to be looking a little bit more decent? It just going to need some again touch up those bases, like the average repairs over here as well too. But part of the process is again you have to get a look on the inside, so that way you're able to estimate repairs. Because if you don't have a look at the property inside, you're just playing it by the ear, then you're going to be way off numbers. And then if you try and get rid of the property with no pictures, then that's going to be very challenging for you to get rid of that property whatsoever. And you won't actually know what kind of repairs is going to be. So even just asking, you're either going to be asking a lot of questions, or like I said, if you want to keep it direct and try to get the property on the contract, then you have to get the property on the contract, but you have to set an inspection period, so that way you're able to look at what's happening in the inside, so that way you can market the property properly. All right. The next process is part of the analyzing process is we got to look for other properties that have sold in the area. There's a few tips and strategies that I always like to mention on these series on how to like expedite the process to see if it's like a good area that you're looking into, or is it not a good area that you're looking into. So putting yourself as the investor or the buyer is understanding how much risk is that property to be? Are you the first person to ever come in this area that is going to be doing projects in terms of like fixing and flipping, where the risk is going to be higher, but once you're able to set that foot in, and then you just want to take the high risk, then it's going to be easy for you to come across other deals that you got to understand like the market on that area. But now it's if there's other investors in the area that already took that risk, now the risk is going to be less, and then you're going to be able to understand what kind of deals they were able to get from the properties, just and what kind of work they're doing as well too. Because usually it's all about mirroring buyers. So if a buyer did X, Y, and Z on this property, so kitchen, bathroom, flooring, and paint, then you want to kind of match it up as well too, and then see what is it that they left untouched and what are some things that they didn't leave untouched. So again, that's just mirroring to the market that you're looking into. But part of that process is you got to look for comparables. And when we're looking for comparables is you definitely have to know, you have to stick within certain parameters for these comparables. And these parameters come straight from an appraiser. So what an appraiser, or once able to look at the property and then see what the estimated value is after the property gets repaired, or what the ARV is now that the property got fully updated, then they're going to be looking for similar homes within these parameters. The first parameter is going to be the living space. So if you're looking at a 1,200 square foot home, they're going to be looking for plus or minus 300 on that 1,200 square foot home. So that way they're able to get like a sense what kind of other projects have been done, or just appraisers. They already, from their experience, they can already know like the materials, and also get like a sense of the labor. So if they don't have like strong comps, then again they're going to be analyzing based on the property's repairs from there. Again, I'm not an appraiser, so I don't have like the full details. All I know is they do stick within certain parameters when looking for comps. And that's the way you should be matching as well too. Unless you're a professional contractor, then you have full leverage of analyzing properties, because you know roughly how much is it going to cost and what the labor is going to be on that side. But continuing to looking at the parameters, next is looking at the radius of comps. Then when looking at radius, we want to look for between half a mile to a 1 mile radius. The biggest con, or the biggest opposite um the biggest the biggest obstacle that you're going to come across when looking at half a mile to 1 mile radius is you're definitely going to always going to come across heavy traffic roads or double yellow line roads. And what those double yellow line roads look like, they look like this, where there's going to be a constant flow of traffic in the morning and for commuters, in the evening for commuters as well too. Getting people are getting to and from work. There's going to be buses, there's going to be delivery trucks, there's going to be semi trucks, there's going to be construction trucks. So there's constantly this flow of traffic happening. Or even just think about a freeway. It's kind of like an off ramp. The freeways, that exit is always busy, full of traffic every single day. So that's going to be a splitting the zoning of, or the neighborhoods overall. So one side of the neighborhood is good. One side of the road is going to be one neighborhood, and then the other side of the road is going to be a whole different neighborhood. No matter, even if you find if you find a comparable, similar to your property that you're looking into, you can't pull that comp, just because again that busy road is splitting it up. Again, it's splitting up the neighborhoods whatsoever. So you want to compare for properties in that same neighborhood that you're looking into. If you're crossing that over that road, then it is not going to be a valid comp or whatsoever. And when you're looking for these comps, that's the challenge arises, where you have to find 3 to 5 comps, where if you're not finding anything, then you can always ask like the seller, if you're working with sellers directly, hey, can you help me like understand how much would it cost? I know you might not be the professional contractor, but can you tell me like, if you were to like update like your home, how much would you spend to like update like your home, so that way you can bring it to like 2023 or even 2024 standards? What kind of things would you do? Would you update the kitchen? Would you update the floor? And then simply it's just asking him, and then we're getting like a sense like, or how much do you think all this will be worth? And they'll give you like a rough estimate, just so you can get like a picture of what the property needs from there. And now if you're looking for properties that are on the market listed with agents, then now you have to hammer down on the agent and be like, hey, agent, what kind of comps do you have? So that way I'm able to analyze the property faster. And if I have an offer, or I want to bring an offer to this property that you have on 123 Main Street, I definitely want to bring the offer as quickly as possible, but it will definitely help me out if you can share some of the comps that you have as well too. And pay attention to the comps that they have. Make sure that it's not crossing those heavy traffic roads as well too, which will come across every time we look at any deal, there's always going to be a major road. So you guys are going to pay, you're going to get a chance to see that whatsoever. And of course, you want to compare apples to apples. So don't compare a 1950s, 60s, 30, whatever the year that your home is, to a 2024 brand new built home or new construction home whatsoever. That is not comparing apples to apples. If you're comparing apples to apples, you're going to be sticking to plus or minus 10 years of a difference. So if it's 1965, the highest you can go to, it's like 1975 from there. So you want to make sure that you're looking at similar homes or whatsoever. Don't look for brand new constructed homes and pull that as a comp whatsoever. That's not going to be apples to apples. Part of the process that we're going to be doing is I have my own calculators that I've designed to help me expedite my process of analyzing deals. And of course, we're going to be using some free resources like Redfin, PropWire, Zillow, Realtor.com. So that way, I'm not an agent myself. So if you're an agent, you have full leverage over me. But if most of us are not agents, then that's the thing with it. That part of that we're going to be using our free resources when we're going to be analyzing a lot of these deals. But part of the my calculators that I've designed, especially in the Pro Bundle, if you want to get them, it's 50% off. Use Super Bowl 24 to get access to the ARV calculator, which we're going to use today, the complete rental calculator, which we're going to use today. There's a CRM if you're starting brand new to real estate wholesaling or real estate investing, so that way you can track all your properties and all your networks, buyers, title companies, whoever it is that you're working with. You're able to track all that. And there's also a new one coming soon of the creative finance calculator as well too. So with that being said, let me stop sharing this and let me head over here so that way we can look at some properties. Looks like we have a few of them that were shared by somebody today. Let's see. Thanks, Bruna. Thank you. I appreciate you sharing this. If you have any details on the property, by all means, I just drove by it and looked at it, and it's in bad shape. Bad shape in the outside, or did you see like any holes on the roof or anything major like that by any chance? I'll pull in the properties as well too. Where's my screen? Oh, right here. All right, cool. So this is going to be the calculators that we're going to be using. This is going to be the complete rental calculator. Yes, this is the complete rental calculator, and this is going to be the fix and flip calculator. So based on these properties that we have going over here, I want to see what kind of things we're dealing with, especially Miami. I don't think I've ever, we've done other states, but I don't think we've done Florida whatsoever. So let's take a look. The outside, the painting, the yard wasn't taken care of. Okay, so basically one of those homes that is just not getting taken care of. That's perfectly fine. Those are the ones that you want to look for, especially if you're doing driving for dollars. Keep your expenses and you have more time, then that's really good. Um, it looks like this is like a land, 26 Southwest 27th Street, Cape Coral. Oh, this is a whole different zip code. Hold on, let me put it back again. If there's an issue with the address, maybe. So nothing's popping up on Miami. Um, so nothing's popping up. Let me double check with Redfin real quick. Yeah, I'm not sure if there might be an issue with the address, but it's telling me that it's this home right over here, West 27th Street, 2602. Yeah, that's the thing. There's no properties over here. that it's popping. It should be somewhere over here, but nothing's popping up on Redfin and Zillow. So actually, let me do this. I know how we're gonna be able to look at it. Pa, 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 pa. Oh, oh, it doesn't even let me. It doesn't even let me. I'll pull it up. Let's see. So it's a building. Oh, okay, I see it. So it is this one, like I was mentioning. I think it was this one right over here, but it doesn't pop up on their. It doesn't pop up on Redfin's data information, nor on Zillow's either. So I think there might be like a data issue with them. Yeah, because it won't. So here, let me pull it up over here. How can I get the APN number? Here, let me try the next one. 23. Sorry, guys, we're just trying to find this amazing property that we have over here. 'Cause it sounds like it's a great opportunity. This one popped up, the 2375 lane. So let me do this. Now that I got this one, because it should be on, they're like a street over from one another, it looks like. So I'm gonna use this lot lines. Because the other property, it's right over here. So it looks like the other one. Let me see. Let me look at Street Viewer. Um, so it's like in a parking lot. So I don't know if this is kind of like a shed that it's owned by this building. So that's my only guess that it could be like an ADU, so like an extra unit, something else that got built on this main home over here, whatsoever. So that's the only thing that I'm thinking that it was probably connected. I know. No, but this is the 2602. So that's the thing. It's this unit probably belongs with this whole lot over here. So this is going to be two buildings in one lot. So that's what I'm estimating, that this lot was not sold separately. So it's not its own property. It's connected with this. So think about it, like it just could have been like a garage, and they took down the garage and they're like, let's make a full apartment or a full house over here for somebody. So that's I'm not sure if that's very common out there to be done. It happens a lot over here in California. So that's the thing that I'm thinking, that this for that 2602, that other building is going to be the main thing about it. 26. That's funny. But let me start with the other one, the 2375. If you have any information or anything what's going with this one, I can use Street Viewer to get like a sense as well too. And then let's see, I think it might be this one right over here. Box doesn't say anything on the floor. There's no numbers for houses as well too. Let's see, and there's no numbers on the home either. If this is the one. Uh, Yeah, so I think it's this white one right over here. So based on this, it looks like there's all this rock over here. I'm not sure what's going on with that. The only thing with Florida too is I don't know how the flooding is over there, over here. Um, so if so far the thing is with these properties that are off market, it's going to be, especially if you're driving by dollars and you're getting in touch with sellers directly. So you're driving by dollars, you see the property it's like, oh, it's in a bad shape of a home, and then from there it's like taking the note. of the property is you have to get in touch with somebody, or you want to get like take a sense of what the property's looking like inside as well too. With this property at this address in West Lane, 26th Lane, um, we gotta get a sense to see. Oh man, and to copy the address. We gotta get a sense to see what's actually happening like inside of the home. Like you're mentioning, you're probably driving by these properties, so you don't have any information whatsoever. Um, and that's perfectly fine, but you have to get the information from somebody. So if you're talking with sellers directly, then this is something that you probably have to do to again to get those details, because it's essentially for you to find out, hey, Mr. Seller, what do you think the property needs in terms of like the inside? Because I can't really say anything what's going on inside of the property. When the last picture I have looks like this, and when I look at Street Viewer, the property looks a little bit better than the picture. So it looks like there was some work done. Um, but also trying to find out like what's happening in the inside. Because again, there's no details other than that from the property itself, and there's no other pictures as well too. Um, but let's go based on what the property is worth. So if you're an investor yourself and if you're an investor and also like a wholesaler and you try to wholesale this, then Redfin, Zillow, they're always going to give us these estimated the estimated value of what a property is. And that's really good. So that way we can give you like a sense on how much the property can sell for. So Zillow is telling me 933, Redfin is telling me 769. But now let's look at what the neighborhood is looking like as well too. Because if you're able to get like a sense of the neighborhood, then that's gonna give you what the after repair value homes are, if it's like a good area as well too, which I know Miami is definitely like a good area overall. But uh, where's it at? Where's this property? Let me duplicate this. And what I'm gonna do is I'm gonna get the zip code so that way I can take a look at where our subject property is. 133. Awesome. Now from here, let's look. So what I like to look in terms of like comps is I like to look at three things. I like to look at what sold, so the past. I like to look at what's under contract at the moment. So that's the present. And what's currently active on the market, then that's going to be the future because it hasn't sold yet. So we don't know how much the property will sell for. But the past and the present is basically telling us that the past is telling us what's actually happening, what the president is telling us what's currently happening, and then the ones that are on the market. So all these properties on the market right over here, it's telling us that these are all potentials as well too. We just don't know how much they could all sell for exactly. So that's where we have to come in and look at again all those three time frames, past, present, and future, so that way we can get our numbers roughly estimated. And like I was mentioning, every single property that you're always going to analyze, you're going to come across main roads. So this is South Dixie Highway. That's a main road. Then you have Southwest 27th. That's going to be another main road. It looks like we have this other one again where there's buses. You see bus lines. That's going to be another one. So I'm going to be kind of creating like my zone of where I should be sticking for these properties. I'm just trying to find like where I'm at. Okay. And it looks like this thing is like being very slow right now as well too. So I'm just trying to find where exactly my neighborhood is on Redfin, but this thing is just glitching out and just being kind of slow. But all right, cool. So we have West 27th. All right, so this is going to be our quadrant right over here. When I was mentioning stick to the same neighborhood, anything across South 27th Street, South 27th Avenue, that's a whole different neighborhood than what I'm looking at right now. So there, Zillow and Redfin, they have like this little drop button, and it lets you draw exactly what neighborhood you want to look into. So this is going to be my neighborhood right over here. Then I have this main street, this other main street, and then South 22nd is another one. So that's my entire neighborhood right there. every property is always gonna be close to some busy or high traffic roads. So for this specific property that we're looking into, this is my neighborhood. Anything on the other side of 22nd Avenue is not gonna count because again, there's buses stopping on this road as well too. So an appraiser is not gonna cross over from one side to the other to look for other similar homes. So now let's take a look at this. Our subject property, it's a 3 bedroom, 3 bath, 1,300 square foot home. So let's start setting some filters on what kind of homes I should be looking for. So I'm looking for a house. Let me look for properties that are, again, nothing that is coming soon. Coming soon is kind of like still way far in the future. I want to look what's currently active and what's currently under contract at the moment. And of course, I want to look for 1,000 square feet plus or minus 300 all the way up to 1,600 square foot homes. And how old is my property over here? 1975. So let me set up my years, if it lets me set up my years. Right over here, year built, 1975. So those, I don't have the option to select 1985. So I'll go with 1990 and I'm gonna go with 1960. Okay, I'm just keeping it broad for right now. And it looks like there are 0 homes for sale right now. And then there are 0 homes that are pending or on the contract for this specific area whatsoever. But we haven't looked at what sold, what has happened in the past whatsoever. And even in the past, it looks like there's nothing at all whatsoever um, on these properties, but that's only the last 3 months. Let's check out the last 6 months, if anything, maybe the last year. So no results based on these properties or whatsoever. Let me take away the years. Let me see what's actually happening if I take away the years. Sometimes it's again taking and playing with the filters as well too. So I do have some comps now. Let me see let me set them by price. So the highest price because I want to see what's the most that a lot of these properties are going for. And it looks like, yeah, a lot of these properties are mainly last year, so nothing really selling this year whatsoever. The last sold, let's see, most recently sold. We have this February 22nd, okay, 2024. But this is a 2-1 property, which it's really good because that means it's a smaller home than our subject property, 1278. And it's 1,000 square feet. So it meets the criteria, but the bedrooms, it's a little bit smaller. So we can definitely play with this because um, if again, if this property that sold was a 2 bedroom, 1 bath, and then our property is a 3-1, then the property's value is going to be higher than that $770,000. But again, there has to be sufficient data to let us know exactly. The only thing with this property is, again, we want to compare apples to apples. So this is a 1948 home. So that's really like a red flag because again, you want to compare apples to apples. Um, Next one that did sell after that in January, 1190 square foot home, looks like 2-1, but same thing with this one, 1940s and it got renovated in the 1950s. So it looks like a lot of the homes selling in this market are a little bit older and the looks like the 3 3s are not selling, rather the 2 1s are selling. 2 1s, 2 1s, 3 2s. What was this one? 3 2, but this didn't sell until like November, and the condition of it, it's a little bit bigger as well too. 1950s home, so that's the only that's the thing is a lot of these properties are just not fully updated, so it's just a bad comp area. Now, how can you find like a good area for you to look into so that way you can make your driving for dollars productive? Then this is what I like to do in terms of like driving for dollars. Let me refresh this because it won't let me click out. So what I like to do is I like to play with quadrants. And when I look at these quadrants, I don't like to set any filters. I like to look at what recently sold on these properties. And I want to look for what has sold in the last 3 months. But I want to look at the whole county. And why I want to look at the whole county, it's because the bigger the picture you're looking into, then the bigger the picture you're gonna get from exactly what kind of market you're diving yourself into. Which our market for this one or our county is Miami-Dade County. So now let me play this game where I head over to the beginning of Redfin and I'm gonna type in Miami, Miami-Dade County. Oh my God, I can't spell tonight. Can't see. Miami-Dade County. Awesome. So I want to look at the whole county. I'm not going to be looking just at one specific neighborhood. So half of the county is just land, and then most of it's going to be right over here, close to like the ocean. But let me look at what's currently sold in the last 3 months. So sold 3 months. Awesome. I'm not going to set any specific filters besides I'm looking for houses. Because if you're looking at houses, you want to make sure you're looking at houses as well too. And let's zoom into like any neighborhood. So this is the way I see Miami getting built is there's a lot of main roads in Miami. And what you can do out here is start outlining how many properties are selling per each quadrant. So this is one quadrant right over here. Let me remove the outline. And so this is one quadrant. So that's just one. But if you do that per each single square, how many properties are selling per each single square? As you can see, Miami, it's a big city. There's a lot of quadrants. So there's a lot of main roads over here that you're going to be looking yourself into. But if you do that per each single quadrant, so that way you can see how many properties are selling, then you want to find where there's the most activity at. If you find where there's most activity, where the most properties are selling at, then that's going to be the area that you want to look yourself into because that's going to be your hot area market whatsoever. And again, I keep seeing some dots. I see a lot of dots right over here on this small quadrant right over here. Is it going to be more than the previous one? 17. So it's a little bit less. So far, that main quadrant, this one right over here is my first one that I'm looking into. Let's check out this other one right here. So this is what you got to be doing. So that way you can get to understand where there's the most activity at. 15 homes, okay? A little bit more from there. They're a little bit more expensive as well too. But if you start, again, that's the part of the subject where you want to look into. Maybe you want to go a little bit bigger in terms of like quadrants or sections. And then that's you have to get yourself into that. So you have to again separate it to like understand how much activity is happening in a lot of these areas overall. And so, like I was mentioning, a lot over here, a small quadrant, there's 24 properties selling there, and everything else it's selling less than 20. So, let me check out this other one. So for the properties that you're looking into, especially in the area, it's just there's not a lot of activity happening. So this is your second quadrant. And right over here, it looks like by West Little, um, it looks or by Hialeah. Looks like Hialeah might be like your area to look into just because the quadrant right before that, it is in the last 3 months, 24 units 24 properties have sold. Right next to on West Little, looks like we have 23 homes selling. So those two areas are going to be a really good market overall. So that's again, and this is only the last 3 months whatsoever. If I dive into like the last 6 months, then I'm going to get a little bit more data. So now I'm looking at 61 homes. So it really depends how far back you're looking, but to me, I'll stick to the last 3 months whatsoever. So that way you can take a look and get like a sense of that area. Just because one of the two addresses that you provided me, it's there's no activity whatsoever happening in there besides a 2 bedroom, 1 bath properties that are selling. And those 2 bedroom, 1 bath properties we're selling, they are selling without any repairs. So if your property on Zillow it says 933,000, but then on Redfin it did say that the property is worth $726,000. Get an understanding from the seller of how quickly they want to close and what it is that they want to walk away with on this property, especially if it's not getting taken care of at all whatsoever. I think it was this one, 23 Southwest. Let me see. Let me pull it up. And then also understand what kind of seller you're looking into. So PropWire is a free data analysis property. That's gonna at least let you know if this is like an investor that you're working with, so an LLC. So it looks like it is somebody's investment, or if it's the owner's information was a person's name, then that's gonna be like they could be still an investor, but it looks like this property it is owned by an LLC. So it's going to be somebody who's going to be educated, and they're probably going to be a little bit challenging to negotiate with because, again, they are going to treat it as an investment, especially if they put it under the company's name as well too. And what I like about PropWire too, it gives you again that analysis, everything that we're just doing through Redfin and Zillow. The only thing you have to look for, again, stick within same parameters, plus or minus 300 on the square footage. Our property's square footage over here says that it's 1370. So you need to confirm that information as well too. Maybe the homeowner or the owner added more square footage to the property. And then it looks like the only comp that I have so far for this one, and it sold in November 27th. It's this property right over here. Let me see. For 628. Let me look, 628, 628. Yeah, I think it's this one. So this property sold in November, and again, it's within our quadrant that we were looking into. This 890 32, it's a little bit bigger home than our subject property. Um, so that's the only thing about that. And it looks like it's in the other side of 22nd Street as well too. So I'm not able to pull one. So I only have one comp. On Redfin, there was nothing. On Zillow, there was nothing. On PropWire, I was able to get one comp, and this property sold for $628,000. But the only thing too, I'm noticing it's a bigger home. But the reason all these are 1,400 square foot homes is because on PropWire is telling me that the property square footage is actually 1,370. Um, so again, you have to go based on the plus or minus 300 square foot. Wait, was it? I think our square footage was 1,500 for this one. This one's it's all over the place. All this information is all over the place. So yeah, this was a little challenging to analyze unless I need to confirm what the actual square footage is. So all the platforms, again, that's why it sucks not being a real estate agent because to get like the most accurate information is going to be access through the MLS. But even sometimes that it's you always have to confirm what the square footage is because again, I'm getting a bunch of numbers in terms of like the square footage from it. But based on the comps, it's just not a good area. There's not a lot of good recent activity um, for it to be selling for $933,000. Like I said, unless the seller has done some great work in the internal and just the outside it looks like crap, then that does happen very often. But that's the thing is the comps are just not there whatsoever. They're just all over the place, and the square footage is just all over the place. So you have to confirm a lot of this information whatsoever. And with the other address that you had giving us, again, it's nothing's popping up in terms of it. So it's just your strategy for this, it's literally has to be if you're diving for dollars, you have to get in touch with somebody to get all the information and figure out what the story is inside of this home, inside of these homes whatsoever. Because again, the information for one of them, it's all over the place. The other one, there's nothing really popping up whatsoever. And from my experience, I have a huge feeling. I say like 95% sure that this property, the one on 2602, that this property belongs to this entire land and it's just split up from it whatsoever. So this could be like the landlord's home from it, and then the tenants, if he's helping managing the property on site, then he's able to help him out off the bat right there. So it's a case that I can definitely see happening for sure. Especially how this is how this setup it's over here. Honestly, that's just from my experience. But again, I can't really know. I don't. There, I'm not playing. I'm playing with very limited information. So I have to get in touch with somebody to collect all this information. And who are those people? It's either going in person, knocking on the doors, or trying to figure out go through like the records to go through all the go through like the records to see who I can get in touch with so I can get it in front of the seller directly. Again, I apologize. I'm not able to give you, but that'll be like my insight. That's how I would approach this, especially if you drove by it as well too. It's just that's the way I will play it, just so I can get the information accurately. Because here's the thing: if you knock on these doors and they're interested in selling, and you're gathering the information, somebody like me that it's like virtually wholesaling, I'm having trouble finding information. But if you're local, you're right there, just knock on the doors, and then you have a higher chance of getting all the details first than anybody else. And then there's going to be confirmed details as well too, where you know where your numbers are going to be more spot on than me doing a virtual wholesaling just by looking at pictures and just looking at estimated numbers. I can go through the county records as well too. So it's just I'm playing more of like I gotta do this 40 steps of research and confirm and just double check, when the simplest route would be get in front of somebody's face and just ask him, hey, are you by chance interested? Oh, awesome. Well, my partners and I, we actually buy properties here locally. I drove by your home. I didn't know if you were happen to be the homeowner or maybe you rent out this property. But yeah, I was just trying to see if you'd be interested on selling and get in touch with her, see how wide they want to sell, how quickly they want to sell. And of course, the most important is how much do they want to get for the property to walk away with it as quickly as possible. Or if you need to work with their time frame, then of course sell at the best time frame that they need it from there. So those would be like all my insights and steps. So that way you can make this deal work for you. Again, the only thing that I see that I can foresee happening with this is the comps are going to be the challenging part. Where, but again, if you're able to collect information properly or you get able to get the right information, and then it's going to be easier for you to narrow it down than to play by the ear, just like how I'm playing it by the ear virtually on my side. But thank you. I really appreciate you providing these properties, because again, not every properties could be a pretty example if you're doing it virtually. If you're doing it locally, it is the best experience that you're gonna have. It's a hands-on, it's just you're gonna have a fuller experience understanding, especially when you look at properties in person. Pictures is one thing, but in person, when it comes to looking at properties in person, it is 1,000 times different whatsoever. You're able to get like a sense of how the neighborhood is, how quiet it is, if it's actually quiet or what's going on. And with that other one, the 2602, the only thing I can say, because it's not right next to the parking lot, maybe there might be, I'm not sure if there's like bars close to it or what's happening, if there's like a nightlife or just a lot of high activity happening in there, that is kind of like bringing like a high risk as well too. So mention that to the seller if you happen to get in touch with the seller, because you're right next to a parking lot. You never know what can happen right next to that whatsoever. So just always be cautious in terms of that. So I apologize we were able to use the ARV calculator, but these will be the steps. Let me show you guys how exactly it will be. I'm gonna play it very aggressive, so I'm gonna go with that number that Redfin had given me, that low price number of the 769 property. So this is the way it will go. Let's say you come across with the seller, you get in touch with the seller, you find all the details, and they're like, yeah, I want like 750 for my property. All right, how'd you come up with the 750? And he's like, that's what I want. All right, cool. Well, how close do you want to close in that 750 then? Again, you kind of want to put some pressure on them, and then see if they want to close, like, are you guys closing interested in closing in 2 weeks, like a month? How quickly you want to sell? That kind of puts them in the pressure, like, oh, this is for real happening. Oh, okay. Uh, I don't know, like how much time, and then they like start stumbling from there. So okay, cool. Well, let me do my due diligence, because I don't that 750 is not really gonna work for us. Try to get the square footage. 1298. Let's just say the square footage is 1,300. All right, you're gonna put the 1,300. There's no basements in Miami, unless, I don't know, there might be something. I truly don't know. Off the bat, the calculator gives you a possible asking price. All right, I haven't done the repairs yet. I'm playing it by ear. I'm estimating that the property needs a good amount of repairs internally. Like I said, the outside looks good. Um, it looks like they did some work like on the outside, but internally, um, the windows, the windows look a little bit newer, so that's good. Door looks fine. Roof. Roof looks a little bit older, especially for Miami. I would expect a lot of the homes to have these tile out here, so I can see that for sure happening. Uh, the trees are really good for privacy, especially how close these properties are to one another. And there's no garage on this property when the neighbor's home has a garage. No, no garage either. And then is this a high traffic road? What is this? A school? Okay. Okay, okay. Sorry, I'm just trying to look at I always like to look at street view so I can get like a sense of like the neighborhood as well too. So it looks like a lot of these homes will have like a garage. Okay, that's perfectly normal. So I'm going based on the property's repairs, but the what the calculator does, it gives you a what the potential offer should be if you're trying to fix and flip this property. Now, if you're trying to wholesale, there's the wholesale button right there. So you guys can see it did drop by an extra $30,000, actually an extra 40,000 dollars just on the wholesale deal. Why? Because again, you're trying to wholesale at a lower discount so that we can bring it to your fix and flipper, which your fix and flipper so far is telling you that they're willing to purchase it at $525,000. That's again without having looking at the estimated repairs so far. Now we dive into repairs, we find out the property is close to like average repairs. The average repairs, we go back to the average repairs. The average repairs are between 25 to $40 a square foot. It's going to be kitchen, bathroom, paint, lights, flooring, and possibly the roof on this case scenario. So I'm gonna go based on $40 per square foot. Miami's a little bit more expensive, so I can definitely for sure like get like an estimated probably close to like $60,000. So let me raise this up by like 40. There you go, $46 per square foot, $60,000. My end investor, they want to make at least 20% on the deal. So the property needs to resell for $1 million or 1.05, which is 1 million 50,000 dollars in terms of it, or in this case, $60,000. We did notice that some properties that were a little bit outdated were selling for like 900. So we can for sure agree that this property is perfectly fine in terms of that. But again, because there's no properties that are currently fully updated, then I'm gonna play it safe and go with my base number, which is my purchase price. So my purchase price of 525 as a fix and flipper. I spend the $60,000, and of course I want to make my money out of it. Then that's where I can sell it between to like $765,000 in terms of it. And if I'm able to get a better deal, maybe the property can even appraise a little bit more because it is like in a good area. That's what I was trying to look at that's why I always like to look at Street Viewer, seeing how the properties locally look. All these are going to be newer homes as well too. They're two levels, so I can't pull those as comps. Again, I got to look for one level homes in the area, and then seeing you're usually able to tell like what these properties that are fully updated look like. And as you guys can see, this is the same thing that we have to do to our subject property is change the roof from that uh bring it over to like this tiling and then just make it white and just add extra touches like internally. This is the same thing that we have to do to our subject property overall whatsoever. So this would be like a great comp again, depending if it's within the same square footage, but I'm looking to see if the properties over here are getting updated, which I see some of them are not. So besides that other one, as well too, I don't know how much they will sell, but we can definitely assume that the property can sell for more than $760,000. Again, the price per square foot I can't really play because this is where I will put in my comps. Again, past, present, it will be my area that I want to stick with, and then find how much the properties can actually sell for my comps. Once and what the comps are going to do is going to give me my after repair value. How much will my property actually sell for? Because again, what the first section is telling me is how much I need to sell my property for my for me to make my 20% if I'm the investor. But now once I'm able to find out what the how much properties are selling for, then this is going to give me the ARV, which this is the number that I'm gonna put in my ARV section. And then from there, it's going to let me know actually after the repairs and everything, how much my investors will actually want to purchase it from. And it's going to tell me they're going to pay the closing costs, how much the purchase price will be. Again, their profit is going to be 20%. And it's going to tell me exactly how much they're going to be making on their money on that 20% from there. So that's how the case will go. But unfortunately for this case, we weren't able to find anything whatsoever. And I definitely want to move forward in terms of finding properties that are rentals. Usually for rentals, I'm gonna stick with Miami just because I know Miami it's a great market in terms of like rentals. Um, what was Miami thing? Miami-Dade County. And again, I'm gonna stick with the whole county just because I want to look at everything from here. And then I'm gonna look for properties that are multifamily. So that way I can show you guys how the complete rental calculator is gonna go. And again, when it comes to like analyzing properties that are being rented out, either single family or multifamily, you have to understand how a lot of these deals get calculated and if it's a good investment for your end investor as well too. Of course, when you bring them at a low discount offer to them, and then they're able to make some good money on their return, either on the rental side or play a long-term game, then they're definitely going to be making like their money. But the first thing they're going to want to worry about is if the property can cash flow. And I know for sure Miami's market, it's a very, very high risk market. And but the return on investment, it is definitely in there. It's again, just like any other market, it's all about finding like the right deals. When I'm looking for these, is part of the process is understanding cap rate. And what cap rate does, it basically tells you the risk of the area. Um, Miami cap rate, and this is what it's simple as doing this. It's typing in Miami multifamily cap rate, and it's gonna let you know what the cap rate is for each single areas, depending on the class that you're looking for, or what class basically means it's neighborhood. Um, a lot of this is going to be again understanding the neighborhoods as well too. And whenever you're looking at a property, it usually tells you what kind of neighborhood it's on through Redfin or Zillow, and it's gonna be on like on the details right over here. Um, Buyer agency, transaction, central. Okay, parking. Okay, for that. Where's it at? Where's it at? Zoning, stories, Bath, year, Miami. Oh, where's the neighborhood? Looks like Redfin did change like their things. There used to be a place where it will tell you like what kind of neighborhood this used to be in. But it looks like they did a recent update, so I think they took it off for whatever reason. But it used to be there. But that's the thing is you have to understand. But I'm noticing so far um a lot of the neighborhoods are close to like 5% cap rates. And what cap rate basically means, the lower the cap rate is going to be a riskier investment. And it's just playing like the long-term game in that investment. But the way the strategy works with cap rate is a lot of investors buy at a high cap rate, which is a higher cap rate, let's say 10, 20, 30%. The property is going to be a safer investment. But the thing is it going to be in a great neighborhood? Most likely it's not. So usually a lot of those, that's where the better neighborhoods come in, but the better neighborhoods are going to be at a lower cap rate because it's safer, but the return is going to be greater long term down the line for that specific investment. So cap rate measures both risk and neighborhoods. So the risk is going to be like the major part of cap rate. So when a lot of investors are looking for properties, is they're looking how much the property can cash flow, and based on that cash flow, what cap rate is it going to give us back based on the potential opportunity in terms of like the rental of it. So that's the only thing with that. But we are going to look into it and see how it's going to get measured in just a few seconds. But it literally took me less than a minute for me to find out what the cap rate is, at least like in the good neighborhoods. Now, if we get into like bad neighborhoods, it's simply just looking through like the area, through Street Viewer, also just calling maybe some agents, some brokers, or just reaching out to some people, get understanding like, hey, I'm looking to invest over here. Can you tell me like what good areas are to like invest in? Where the bad areas are as well too. Just because again, the bad areas is going to be where the cap rate is going to be higher, which is good. But again, the risk is going to be in the neighborhood as well too, comparable to like the class A, class B, class B neighborhoods, or as you was mentioning right here, suburban class B, suburban class A, luxury metro class B, and luxury metro class C. But all of them are close to like 5%. And so I'm gonna estimate a lot of these properties that are in the market with an agent. I'm expecting all of them to be close to like that 5% cap rate. But let's dive into the numbers and let's see what we're able to find out. So for this one, I'm looking for properties that are at least like fully updated or are like in great shape already overall. Um, so let's take a look at this one right over here. Okay, not bad. This is a good property so far. So I want to look for, first things first is the property's price. The property's price and value, because this based on the current interest rates, I want to find out what my initial investment is going to be at, which is a good starting point, so you can know how much you're going to be spending in terms of it. Let's go back to this one. So this is a fantastic duplex. Duplex is 2 units. Um, Also, exciting opportunity potential, twin home construction, okay. What I'm looking from the description is I'm looking for the agent to provide information like the rent. So I need to find out what the price is and what the rent is so far, if they happen to have anything. If they don't have anything, then I'm going to use some free resources to find what the potential rent is. But potential doesn't mean guarantee. Potential is just a potential opportunity. So it's just not guaranteed. So just be wary about that. And it looks like a lot of these properties are not fully updated, but here's one right here. All right. Ideal location, opportunity. All right, cool. Duplex. Tenants would like to stay. The 2 units are 2 bedroom, 1 bath. Okay. Especially with the tenants, if the tenants are trying to stay, then I need to find out how much they're currently paying right now. The next thing is medical shopping. Okay, cables could go fast. Only 2 days. More photos coming this weekend. But honestly, the property looks in really good shape. Maybe the outside, not so much, but internally, really good, actually, overall. Um, it probably just needs some cleaning, honestly, just little touches. But I mean, there's the tenants want to stay. So I actually don't have to worry about updating it. It's just again, they're willing to stay. So that makes it even easier because we don't have to do any updates on the property or spend any money on doing some repairs. But so let's look at this. I'm gonna show you guys my 2 free resources for rental. First one's gonna be Zumper. Zumper average rent, and then I'm gonna paste the address, but I'm not trying to put the whole address. I'm just trying to get the city, the state, and the zip code, and then bam, average rent in Miami. Again, it does gotta be vary from it. And over here, it is 2 bedrooms, 2 units that are 2 bedrooms, one bath. So it's gonna be 4 bedrooms, 1 bath. I mean, 4 bedrooms, 2 bath. So let's select 4 bedroom. This is a house. Let's apply it. And it looks like my rent. So it's 2 units. Remember that. So whatever the rent is over here, we have to cut it in two. So 3,100 is going to be 1,550 in terms of like the rent. That's based on Zumper. So Zumper average rent, and then type in the city, state, and zip code. The next one I'm gonna use is the Zillow rent estimate. And again, these are estimated rents. These are not guaranteed. I gotta find out, especially if the tenants want to stay, the current tenants want to stay, then I have to find out how much exactly I'm able to get from them, or how much they're paying at the moment as well too. Now the next thing is Zillow is telling me that I can range between 3,300 to like 4,600. So that's a little bit better. And then my average, this is whatever number it gives me over here is usually like in between the average of these range numbers. So this is telling me 4,000, which is that's better. I'm able to get at least $2,000 per each unit. But I'm gonna play it safe. And the other one's telling me 2,000. This one's telling me 15. I'm gonna go in the middle and go with like 1,800. Again, I'm playing it safe. I'm playing it very, very safe for right now. So my average rent is gonna be $3,600 a month. Again, I'm just playing it safe. I don't know what the rent is currently with the current tenants. So let's go back to the property. The property selling for $705,000. So $705,000. My 20% down payment, I need $141,000. My interest on the multifamily is going to be between 7.5 to like 8% right now, maybe a little bit higher because I know interest rates are going a little bit higher right now. Um, my closing costs range between 2 to 5%. I'm gonna go with 4% right now, just playing a little bit safer. So I need my initial investment upfront money to start off the investment. I need $169,000, which is definitely a lot. But again, that's the thing. I got to look for a buyer who's interested in buying a property that brings some money in. But let's find out, does this property bring some money in? Let's check it out. So the agent said it's 2 units that are 2 bedroom, 1 bath. I'm gonna rent each unit at $1,800. So again, it's gonna bring me a total of income of $3,600. The property does not have any garages, I noticed. There's no garages or whatsoever. It's kind of like this little driveway. I'm guessing this is very common over here in Miami. Um, and there's no storage or anything else that I can charge for the apartment. So there's no extra income that I can bring into the table for me to add. Like there's no garage, there's no laundry, there's no extra income that I can bring. So it's just literally just the $3,600 for this property. Now, so I have $3,600 every single month. The $3,600, you multiply that times 12 months for the entire year. Your annual income or your yearly income is going to be $43,000. Of course, as beautiful as that sounds, it's not just that. Now we have to subtract expenses. I live in California, so if I was an investor and I want to invest in Miami, Florida, especially on this location over here, I need to have somebody manage it for me. I'm definitely gonna have to pay some expenses for all this. So some of those expenses, I can break it down to the dollar, so I can find out exactly how much I'll be spending. But those expenses are gonna look like this: taxes, insurance, HOA, if there's any, maintenance. Maintenance could be like gardening, if there's like a pool or something, because I know some properties have pools out there, but this one doesn't. It's perfectly fine. So overall, just maintenance of the property to make sure it just looks in good condition as well too. Vacancy, if the tenants happen to move out. In this case, the tenants want to stay, so that's perfectly fine. I just need to find out how much they're paying, and of course, a property management. So I can break it down to the dollar. Or I'm gonna go by my rules. My 40% rule is if I'm out of state, I'll have somebody else manage it for me. I'm gonna stick to my 40% standard rule. If I'm managing the property locally, then I can drop 10% of it, which will be having a property manager for me, where I can bring my expense down to 30%. But of course, I'm out of state, so let me go with 40% right now. So my rough estimated expenses are 17,280. You have your gross income, you have your first set of expenses, you subtract those two, the difference is $25,000. So that's my net income for me, which 25,000 equates to $2,000 every single month. But now I have another expense, and that's my mortgage expense. And my mortgage expense for the entire year it's an estimated 23,000, sorry, 49,000 49,661. If you go back to what my monthly payment was going to be, is basically this. So if you multiply 4,138 times 12, it's going to give you that $49,661. So then now I'm negative. This property is not even bringing me any money whatsoever based on the current rent, which I'm playing it safe. I'm just giving some rough estimates. And the property's cap rate, it's at 3%. If we looked earlier, a lot of the multifamilies are around 5%. So this is a riskier investment. And not only it's riskier, but also it's not bringing me any cash flow, or it's not bringing me any money every single month. Rather, I'm losing $1,900 every single month. So how can I make it cash flow? Well, there's two answers. First one is I have to bring the property at a lower price, or two, I need to raise up the rent. So the rent has to be way, way more than expected. Um, so what's the first thing I gotta take into consideration is price. The price doesn't really make sense, and maybe I might be off on my rental, so I have to check both of those as well too. But now let me look into it. If the average in the good area on the luxury areas is 5%, this one, it's not a luxury home whatsoever. So it cannot definitely it's definitely way too low for it to be at 3.68%. But that's what the agent and the seller is telling me so far. Um, so then from there, I have to play it safe, and I'm gonna go based on my 10% cap rate strategy, where at 10% is usually the recommended. Because again, when it comes to looking for multifamily investments, you want to look for a high cap rate, or you want to buy at a high cap rate, then sell at a low cap rate. And that's perfectly fine. If that seller is that's what they're trying to sell it for, then let them do the thing. It's just I'm not the right buyer. Maybe they're gonna have a hard time try finding a buyer to buy it at that low cap rate. But I don't think that's really happening whatsoever. So then, if the average is in a good area is 5%, I'm trying to get it at 10%, then I'm gonna start my negotiations at 9%. At 9%, this property, I need to purchase this property at $288,000. Because then now, let me put in numbers. Let me see what I can get it for. Even at $300,000, it's half of the price. But again, I'm not even making any money whatsoever based on the current price. I'm gonna leave the rent the same at 1,800 per each unit. And then the only thing I dropped so far is the price. So I dropped down to like $300,000. Now, if you guys can see, my property, the cap rate went up from 3 to 8%. Awesome. Now I'm bringing some money in. I'm bringing around $4,000 every single year, which is roughly around $398, which that's perfect. That's really good. Between 200 to 500 every single month. That's usually like the aiming point that you want to get in on a multifamily properties. But that's where I will need to buy it at for me to make some money on this property. But what's the most that I can get out of it as well too? So let me push it up a little bit higher. Let me go up to like 350, because I know for sure the seller is not gonna be like, "Are you crazy? A $700,000 property, you trying to buy it for 350? That's 50% off from what I'm asking." Well, that's the reality. If the tenants want to stay, depending on how much they're paying right now, and then for me to make some money, because I want to make sure that the property is bringing me some cash flow. Again, my property's cap rate, again, I'm trying to negotiate with the seller. So now my cap rate at $350,000, my cap rate is 7.41%, which is a little bit better. The property still cash flows just a little bit. Again, not between 200 to 500. It's $100 each single month. But again, I'm playing it safe because that's the type of investment I'm looking to get into. It's just buying it at a 5% cap rate. It's not gonna bring me any money. What would a 5% cap rate look like? $518,000. Even buying at $518,000, I bet you the cash flow just goes out the door off the bat. Cash flow goes out the door. Now I'm losing $10,000 each single year. So whenever you're looking for investments, if I were to bring this to an investor, I would be like, no, this property is not making me any money whatsoever. Yeah, it might be like a good in a good area, but if I'm losing $10,000 each single year, then I can pay the taxes, let the property depreciate, and then I'm negative $10,000. But do I want to be negative $10,000 each single year? And especially if the tenants, depending on how much the tenants are paying, is it going to bring me enough money? And how long is it going to take for me to like break even on my initial investment? And also how long is it going to take for me to finally be positive on that from that initial investment? And I definitely don't have time to wait 100 and maybe like 360 months. That's gonna, again, that's gonna be basically 30 years for this property, but to finally make its own money, to finally make money on its side as well too. So it's all really, in all reality, when you're looking at multifamilies, it's literally down to like the numbers. Even just on the fix and flip side, is down to like the numbers. Just real estate overall, it's down to like the numbers, but the numbers really have to make sense for your end buyers. And that's why I host this series, is because, again, before you're trying to wholesale a deal, it's you have to understand where your buyers are coming from. If you don't understand where your buyers are coming from, then whenever you try to get them a deal, if your properties are constantly getting rejected, or you're not finding somebody who's interested in it, it's because you are way off on your numbers, or just the numbers are not really making sense on your side, or just you're not doing like a thorough due diligence. So this was a thorough due diligence in terms of doing a property that is completely rented out. First off bat, it's it's a good property. It looks really good. I'll say that. But the only thing is it bringing me some money? Or as soon as I buy the property, do I want to lose some money? Do I need to spend $10,000 out of my checkbook so I can basically pay for the property so that way I don't lose the property? No. That's not an investment that you want to look for whatsoever. You want to look for investments that are really in good shape, or in the fix and flip is looking for properties that are in bad shape. But on the rental side, you want to look for properties that are really good, well maintained, but also it's making some money off the bat. And if it's not making some money, then you got to look for a different property that is going to be making some money. Because if it's making some money and then you get it at a great price, then when you bring a buyer that sees that the property is making money already off the bat, and you're going to be able to make your money on your side as well too, because they're going to be really interested on how much money is going to be able it's bringing them off from the beginning, um what's from the initial investment whatsoever. So do a thorough due diligence on either, if you're trying to fix and flip, do a thorough due diligence. Or if you come across properties that need to be rented out, but just make sure overall you're doing a thorough due diligence. So that way you're um, you're bringing deals to your end buyers and you're able to close a lot of your deals quickly. And not only quickly, but are constantly moving and moving. And if there's a lack of information, it's you have to get in front of somebody who's willing or can give you all this information. If we just like earlier, we came across two properties that were playing it by the year, but if you're locally to that area, it's all about getting the information as quickly as possible and get the most accurate information so that way you can make a deal happen. Not force a deal, make a deal happen because the numbers make sense, the area makes sense, and the potentials make sense as well too. All right. So I'm gonna leave it open for some Q&A. I know this whole series and this video, these events are very informative, high informative, just thorough informative information type of content. But at the same time, I want to leave it open just in case you guys want me to touch bases back again on any specific topics that I did mention, either in the fix and flip or rental. So if you guys have any questions, you can drop it in the chat, or you're able to unmute yourselves, so that way you can ask your questions right now, if there's any. No questions. Okay. All right, that's pretty fine. Well, if you guys, again, if you want to have access to all the previous Zooms and all the content that has been out there, so that we can go back and analyze, look at how other properties get analyzed. If we happen to come across a deal in your area, head over to the website. I put all the links on the chat. So have access to those as well too. And if you want to get access to the calculators, you have access to the calculators as well too. And then don't forget to use the Q and A the coupon so that we can get 50% off from the calculators and have access to again the rental, the ARV one, the creative finance one, and also the CRM. If you don't have like a system to like track all your people, by all means. Question, yeah, there's a question above. Being a real estate agent is an advantage, but it has its pros and cons because some states don't allow you to wholesale if you're a real estate agent. If you're trying to do real estate wholesaling, um, it's just real estate. Being a real estate agent, it's really helpful. So that way you can get into like those steps if you don't have like any experience of talking to people. So it's really good to like get you like in those steps of just how to market. Again, because when a real estate agent does pretty much everything a wholesaler does. They're knocking on doors, they're doing marketing, they're putting posts on social media, they're calling sellers. They need to find sellers every single month for them to sell properties. So that's pretty much what a wholesaler does as well too, is they're constantly doing an outreach, a huge level and a huge volume of outreach, so that we're able to get in front of sellers and get the sellers to sell to them as well too. So, but the only thing, the biggest advantage that I'll say about a real estate agent is having access to the MLS. That's again if they know how to use it properly as well too. Because some agents are really good in terms of like giving you comps that are like, oh, okay, these are great comps. I really appreciate it for giving me information. That way I can make my decision faster. I'll respond to you on what my offer will be in the next 24, 48 hours. Um, so it's having an advantage in terms of that. But also some of them are very knowledgeable because they work with other investors. So without investors, honestly, some real estate agents wouldn't know how to make like a deal happen in terms of like multifamily. So it's a collaborative field where agents learn from investors because again, investors are constantly creating new strategies. That's why there's a different amount of strategies that you can do right now, from college dorm rooms that's old to like Airbnb, to working on short-term rentals as well too. So there's just so many strategies. But again, real estate agents are not in the business of a real estate. They're in the service industry where they're helping sellers sell their property because again, they have the tools available for that and they have their licenses, which allows them to sell the property. Because as a wholesaler, you're not selling a property. If you're selling a property, you're a real estate agent. If you're selling a contract, you're a real estate wholesaler. So real estate agents are in the service industry and it's just they're in the service and their service they learn from their experiences on that service as well too, because they're either working with investors, or if they strictly just like first time home buyers, they know mortgage lenders and they know what the rates are going for, and they're really great at setting up open houses and how to make a house look spectacular for that open house and how to promote that open house spectacularly. So there's a different variety of real estate agents. So it just depends on who specifically you're working with. And from my experience, I like to work with real estate agents that are investors themselves as well too, where they actually buy, but they actually a lot of them do share where they're buying, and they know like the area very well, and they know a lot of the language when it comes to like a lot of investments as well too. So it really depends. So just like there's a different variety of buyers, there's a different variety of real estate agents. So it all depends on who you're working with. Same thing with buyers. if there's any questions. So hopefully I was able to answer your question.
Yeah, you did. Thank you so much.
Of course, of course. Any other questions? If not, then that's pretty much our wrap for today. And again, this the next event will be on Wednesday, yeah. I think today was Wednesday for some reason. But yeah, Wednesday will be the next event. So if you happen to be coming in again, I'll see you. It is repetitive, but we touch on different markets. And again, sometimes we come across good deals, sometimes we gotta come across bad deals. So it's not always pretty. But if you definitely want to come back on Wednesday, it will be hosted at 6 p.m. Pacific Standard Time. And if you have any properties, so if you're struggling on analyzing a property that you come across, then by all means share it and we'll see what's the best that we can do in terms of analysis on that property. So thank you guys for coming today. You have a blessed rest of your Monday night, and I'll see you guys next time. Take care.